I'm going to focus, people have been talking about mortgage finance. I want to just focus a little bit on the tax side because that's the biggest source of subsidies for home ownership. In 2011, the mortgage interest deduction amounted to about $80 billion a year of tax revenue, lost tax revenue. The deductibility of property taxes was about $25 billion, and the exclusion of capital gains on the sale of primary residences was about $20 billion. So that's a significant amount of revenue, and if you look at the projections, it'd be increasing depending on, we can't go an hour without saying fiscal cliff, but depending on how the fiscal cliff negotiations go. But it is a significant amount of revenue, especially as Doug alluded to, in a very constrained world fiscal world that we face right now. So there's definitely scope and need for rethinking the distribution of our net subsidies across home ownership and renting. The usual case, if you're going to justify that much intervention towards home ownership, I'm by trade an economist, so you would look for market failure justifications for it, and indeed there are some in the literature, and in fact, Brian alluded to a few of them. There is some evidence that home ownership increases tenure, it increases civic engagement, and it therefore increases investment in local public goods. I would offer three cautionary counterpoints to this. One, these estimates by the authors, frequently by their own admission, are highly uncertain. It's very difficult to know whether or not home ownership is leading to these positive outcomes, or people who seek greater tenure and seek greater civic engagement tend to be homeowners. So empirically, it's a difficult thing to even know. Secondly, even if it's empirically valid, it does cut both ways, and this was alluded to before. Greater tenure might make you more civically engaged in your local community. It also might make you less mobile, which could also lead to labor market inefficiencies, and there's some evidence as that as well. Those empirical evidence suffer from the same problem as the counter studies, but it's just to say that it does cut both ways. And third, I would suggest that even if we think that we should be leaning into home ownership over rentership, we're not going about it the right way. We have very clunky policy, as Doug alluded to also, on the mortgage interest deduction. It's in addition to subsidizing home ownership, it also is subsidizing lower down payments, more borrowing, bigger homes, more energy use. So there are better ways to do it. I don't think we're going to get rid of the mortgage interest deduction, but there are a lot of plans on the table on how to revise it, I think, in strategic and smart ways and to limit it. So I'll just conclude by that by saying we indeed should be subsidizing shelter across rentership and home ownership, but I think both the theory and the empirical evidence suggests that we're too disproportionately focused on one rather than the other.